All right, folks, welcome to Singapore Property Talk Law. We're going to be talking all about private property financing in Singapore. I mean, this stuff can be really overwhelming, right?
Oh, absolutely. Especially for first-time buyers trying to, break into the market. It's tough. But we're here to help. I'm Serene.
And I'm Damien,
Yeah.
and we're going to help you. We're going to break down all the complex stuff, look at some creative strategies you might not even have thought of before,
hmm
and those cooling measures everyone keeps talking about. We'll give you some ideas on how to get around those. Whether you're a first-timer or you've been doing this for a while, this is going to be good. All right, so let's start with the basics.
Yes.
Down
Wow.
payments,
Yes.
right? That's where it all begins. So when we talk about private property in Singapore, what does the down payment structure look like?
Well, it's quite different from an HDB loan. So, for bank loans, we're looking at that 5% cash down payment. It's a lot for some people.
Well, 5% sounds small, but on a $1 million condo,
That's right.
that's 50 grand.
Yeah, exactly.
That's a lot of cash up front.
It is.
And then there's the rest of the down payment, right? Can't you use your CPF?
You can. You can use your CPF OA savings for that remaining 20%.
So 25% total down payment.
Yes.
5 cash, 20 CPF.
Got it. Okay, so that's with a bank loan. What about HDB loans? Those are different. Right?
Yeah, HGB loans have that staggered down payment scheme, which can be helpful for first-time buyers because it lets you pay in installments.
Interesting. Okay, so we've got our down payment sorted, but it's not just about that, is it? There's this thing called the loan to value ratio, LTV. What exactly does that mean? What impact does it have?
So LTV basically dictates how much the bank is willing to lend you. A lower LTV means they see you as less risky and they'll loan you more.
Okay, so lower is better for the buyer.
Right. But if you want lower monthly payments, you take a longer loan, your LTV usually drops.
So it's a trade-off. Longer loan, smaller monthly payments, but you might need a bigger down payment.
Tricky. And I know there's also this thing about LTD changing if your loan goes past a certain number of years or past your retirement age, right?
Yes, if your loan is longer than 30 years for private property or 25 years for HDB, or if it goes past age 65, the LTV goes down to 55%. So instead of putting down 25%, you might need 45%.
Wow, that's a big difference. Okay, so we've covered down payments and LTV. But there's more, isn't there? Those financial ratios, MSR and TDSR, tell me about those because I know those can trip people up.
Yes, they can. MSR, or mortgage servicing ratio, applies to HDB loans and says your monthly loan repayment can't be more than 30% of your income. TDSR, which is total debt servicing ratio, applies to private property loans and is capped at 55% of your income.
So basically, how much of your income can go to debt repayments? But it's not just the housing loan, right?
No, it includes all your debts like car loans, credit card bills, personal loans, everything.
Right. So if you're maxing out your credit cards every month, that's going to affect how much you can borrow for a property. People don't always realize that.
They really don't. So it's important to be aware of your TDSR and make sure you're not over-leveraged before you start looking at property.
Great point. So before we move on to the really fun stuff, all those creative strategies for financing, I just want to say to our listeners, get a good handle on your finances. Understand your TDSR, MSR, and all that jazz. It'll make your property journey a lot smoother. All right, ready to talk about those creative strategies? All right, let's dive into those creative strategies. I'm intrigued.
Okay, so one that's becoming popular, especially for people who already own property, is the equity loan.
Equity loan. Tell me more about that.
Think of it this way. You bought your place a while back, right?
Right.
And it's probably worth a lot more now.
Hopefully.
With an equity loan, you can actually borrow against that increased value. It's like getting a new loan that covers your old mortgage and gives you extra cash on top.
Oh, I see. So it's like you're using the equity you've built up in your property to get more cash. Pretty smart. What can you use that cash for?
Pretty much anything. Invest it, pay off debts, start a business. It's up to you.
That's awesome. But, everyone's thinking, can I use this for a down payment on another property?
You're right. That's what everyone wants to do.
Right.
But most banks won't let you use it directly for a down payment on another property.
Okay, so how do people get around that?
Well, some investors, they'll take that cash from the equity loan and invest it maybe in stocks or bonds,
Okay.
let it grow a bit, and then sell those investments to use as a down payment.
Ah, clever. So it's not direct, but it's a way to use that equity to buy more property. But isn't that risky? What if the investments don't do well?
It definitely has risks. That's why it's so important to talk to financial experts who understand these strategies and can advise you properly.
Makes sense. Okay, so equity loans, that's one way to get creative with financing. But what about those of us who are struggling to even get a loan in the first place? because of PDSR and all that.
Yeah, that can be tough.
Any tricks for that?
Well, some people use a tactic called show of funds.
Show of funds. What is that?
Basically, it's like dressing up your bank account right before you apply for a loan.
Okay.
So you deposit a large sum of money, like, say, $100,000.
Where would you even get that kind of money?
Could be from family or, well, anywhere, really, as long as it's legal.
Right.
Anyway, that sudden influx of cash can make your monthly income look higher to the bank.
I see. So you make it seem like you have more money coming in, so they might approve you for a bigger loan.
Exactly.
Wow. But is that even allowed?
It's a bit of a gray area.
Okay.
Banks don't always check where the money came from, but you got to be careful.
Right?
They have different policies, and if they think you're trying to trick them, well, it could backfire big time.
Yeah. Better not to mess with the banks. So for our listeners, if you're thinking about show of funds, make sure you talk to a financial advisor first, understand the risks, and do it the right way. All right, so we've talked about some strategies to boost your borrowing power. But then there's the big one, right? ABSD.
Oh, yes. Additional buyer's stamp duty. The bane of many a property investor's existence.
Tell me about it. ABSD can really add up when you're buying multiple properties.
It can. But don't worry, there are ways to minimize the impact.
Okay, good. Give me the good news. What are these magical ways to get around ABSD?
Well, one way is to buy the property under just one spouse's name.
Oh, interesting.
Yeah, so that keeps the other spouse as a first-time buyer, at least on paper.
Right, so they can avoid paying that ABSD later on.
Exactly.
Smart move. But wouldn't that limit how much you can borrow since you're only using one person's income?
It can, you're right. And the other spouse can't use their CPF for the property either.
Ah, so there are trade-offs.
There always are. It's
Yeah.
all about finding the right balance for your situation.
Okay, so talk to your partner, talk to a financial advisor, figure out if this strategy makes sense for you.
Got it. Now, what about that decoupling thing? That
Uh,
sounds kind of scary.
Decoupling. Oh, it's not as scary as it sounds.
Okay, good.
It's just a legal way to transfer ownership between spouses. So one spouse basically steps away from owning the property.
Right. They become a first-time buyer again and can potentially avoid ABSD on their next purchase.
I see, I see. But wouldn't all this transferring back and forth be expensive with legal fees and all that?
Well, that's where the 99-to-1 ownership split comes
What's
in.
9 to 1? What's that?
So initially, the property is owned 99% by one spouse and just 1% by the other.
Oh,
This lets them use both incomes and CPF for the loan. Then, later on, when the 1% owner wants to buy something else, they just transfer that small share, which keeps the costs down.
clever.
Oh.
But are there any downsides to this 99-to-1 split?
Well, the 99% owner needs to have enough cash to return the other spouse's CPF plus any accrued interest.
Right.
And of course, there are still legal fees, just not as much.
I see.
And, you've got to think about the relationship aspect, too.
Oh, yeah. Splitting ownership like that could get complicated.
It could. Open communication is key.
Definitely. All right, so we've talked about using one spouse's name. We've talked about decoupling. What about buying under a child's name? Is that something people actually do?
It happens, but it's tricky.
Right.
The child needs to be over 21 and have enough income to qualify for the loan themselves.
Which might be tough if they're just starting out.
Exactly. Plus, it could affect their future housing plans, especially if they want a HDB flat or an EC later on.
Ah, I hadn't thought about that. And I imagine family dynamics play a big role, too.
Huge. You have to be very careful with this strategy. Lots of potential for conflict down the road if it's not handled properly.
Sounds like it.
Yeah.
Probably best to talk to some experts and really think it through before going down that path. Well, this has been fantastic. We've covered so much ground today. Down payments, LTV, TDSR, those creative financing tactics, and all the ways to deal with ABSD. I feel like I just got a masterclass in Singapore property financing.
Well, we tried to pack a lot in. It's important for people to know what their options are.
Absolutely. The more you know, the better decisions you can make. So, for our listeners out there, remember, do your research, talk to the experts, and most importantly, don't be afraid to get creative. There's a way to make those property dreams happen.
That's right.
Thanks for joining us on Singapore Property Talk Law. Until next time, happy investing.